how do I get tax benefits from paying my children for doing work in the business?
All right, so I'll try and be real careful with this one because it gets kind of complex the way I describe it usually. First of all, basically, you can just pay them out of whatever entity you have. That would be part of the, the thought process is what business is paying them. Let's say you have a rental property, if you pay them out of that one, probably you and or your spouse own that LLC that the rental property is in. And if you did it there, then the child's not subject, if they're under 16, basically 16 or under, not subject to employment taxes, which is approximately a little less. Yeah, 18, yeah, for the feud, I believe, yeah. And so, if we're younger, then we don't have to pay the employment taxes. And if it's under, I think we're at 14,650.
Yeah, this year it's up to 14,000, $60. And the really cool part is, you still have to run them through payroll. So you're doing the W-4 and is it W-4? Yeah, W-4. Yeah, W-9s for the independent contractor. W-4, and you're just saying no withholdings because you don't plan on having any tax. So you're not withholding. There's no FUTA. There's no OADSI, which is Social Security or Medicare. There's no withholding. So you're literally giving them all the money. You have to run it through payroll though. And if it's, again, under 14,000, they pay zero tax on it and you deduct it. So what does it mean to you as a parent? It means that you don't have to pay a bunch of tax on spending that 14 grand. So let's say that it's going to cover school, car, clothes, just living expenses. And you're basically saying, hey, I'm going to pay you through here. They actually have to do work, but I'm paying you this. And if you spent, let's just say $10,000 on average, you have to make 15. So according to the Tax Foundation, the average tax in this country is 29%. So just right about a third of it goes bye-bye. So you're looking at about close to a $5,000 tax bill. You save that. So it's going to save you, in this theory, if you did it $10,000, it would save you about $5,000. It's kind of wild. Everybody's facts are a little different, but you get the idea. It could save you a substantial amount of money. It could save you a really nice vacation. Is there a minimum age? There's tax court cases going to 9, but the rule is if they can do any service for the company, including being used for modeling. So the 9-year-old was given Screen Actors Guild rates for being the model on the marketing, doing them, using them for brochures and for websites and things like that. You could pay them whatever you'd pay a third party. And in that case, they used the Screen Actors Guild. So it was a pretty high rate.
Yeah. And again, this is if you're paying it from an entity owned that's disregarded or sole proprietorship owned by one of the parents or a partnership owned by the parents. It would be different if you're paying through a C corporation there, whether you 1099 the child or you W-2 them via a W-4 form. You're going to get hit with the employment taxes. We can't get out of it that way.
But it's okay.
Yeah.
You have to hit your 40 quarters. Right?
Yeah, exactly.
So it's still going to add, it's still going to benefit them in some way.
But we do have a kind of workaround with that where you could lease the children from that LLC we're talking about. To
Mom or dad.
Yep.
Mom or dad who sets up an LLC, taxes a sole proprietor, pays the child, zeroes it out. You got to the same place as you wanted to without all the payroll tax.
Yep.
And then somebody says, where do I put their money? You're going to have a custodial account at the bank. And you might just put it in a Roth. I get them $14,000, or let's just say it's 10. Pay them $10,000. And they're able to take that money, 7,000 of it, I believe they put right into a Roth, and the other portion, maybe,
college or whatever.
Yeah, put it in, or yeah, probably. Well, they're just going to spend it. It's tax free. So let's just get it into the Roth. I'm trying to think if there's any other accounts I'd put them in. If you're running them through payroll, technically, you could run it into a 401k, right?
Yep.
So we could absolutely kind of double up on the tax benefit. The best one is the Roth because you'll never pay tax. So if you have let's just think you have a 15-year-old, they're going to retire in 50 years or whatever it is. Just think of how many times that money is going to compound. Even if you put it in the S&P, which is averages over 10% in its history. If that's all you did and you just sat it there and just let it grow over 50 years, you're talking about doubling every, what would that be, every 7 years. So you're talking about 7 doubling. So, so let's just say you put in 7, goes to 14, goes to 28, goes to 56, goes to 112, goes to
220,
2 something, and then yes, 4 something,
more money than they need.
800, like they're going to be right around that $1 million mark for a pretty, which is great. That's what we want. But yeah, you nailed it. If they are a question we get, I'm just going to follow up on this just so that we're doing it at least. Sometimes people are saying, what about my sibling? What about my parents? What about a child that's an adult? You run them through payroll, right? Or they have their own business and you're paying them that way. But yes, you can still employ relatives. And if you're caring for a relative, like let's say you have a parent that you become their caregiver and they're dependent, then you can cover them under things like your medical, your health reimbursement plan. If it's a C corp, there's other ancillary benefits that come along versus you just doing things because you feel like it.
A lot of good stuff.
Yeah, we want to get the benefit. Hey guys, if you like this snippet of Tax Tuesday, then I invite you to click the link and actually subscribe to become a Tax Tuesday member. Every other week, we do these live, and you too can ask your questions, and myself and my team will answer your questions on the next Tax Tuesday.